Welcome to weekly analysis for GBPJPY. This is the analysis for the first week of March. We're in the last month of the first quarter, and we're almost quarter way through the year. But one second, there's a lot going on here, and we'll simplify it. But let me just talk about some scenarios. So we saw 300 pip sell-off after rejecting 150.5 area, right? We broke the structure over here, created a resistance at 149.2, a supply area, and then we went down to 4-hour demand at 147.5, right? And what we saw was it's a pretty strong demand currently. And in order to go down, we need to break it, right, for further. But we can also watch for possible buys here because as you can see, we did see a nice 100 pip rejection, 160 pip rejection. But you also got to take into account that that was after we had just dropped 300 pips, right? After GG had just dropped 300 pips, so we needed some sort of retracement. What better level than this 4-hour demand at 147.5, 147.4, right? Okay, so currently we have an intraday supply right here, right? Like an hour, 1 hour supply. So it's possible that this could be a lower high. Price comes up here, rejects it, and if it does, we can go down here. Other scenarios that maybe we'll find, since it's a new monthly candle, it's possible that price retraces before setting up for further buys. So maybe from here, and then we go back up, right? So it is a strong higher time frame support, possible retracement to here for higher time frame buys, right? If that doesn't play out, then safe sells on the break and retest of this, right? But yeah, as you can see, it is a solid, strong level. So let's say price, so we'll just go over it and we'll go over exactly how I drew the levels. So let's just start off by looking at monthly, okay? 1, 2, 3, 4. 4 months in a row, price has been going up, right? And I'm gonna draw a level right on this candle body right here, as you can see, right there. And you see we rejected it, right? We rejected that area. So we can say narrow down to 0.500, right? As you can see, if when we're looking at monthly over here, we see that there's when price was back in this area and we closed above on the monthly, price retraced down the next month to a better buy area in August 2017 before pushing back up. Same thing happened with the November 2017 candle. That price pushed down here before pushing all the way back up, and then price retested and continued up. Where did it continue up to? This candle body level at 155. So we know that if we do go back above 150.5 and we stay up there, we're going to continue on the higher time frames to 155. 155 is a likely area, right? Otherwise, what we need to watch out for is now we need to watch out for possible retracements. And where could these retracements happen is, and you're thinking to yourself, okay, since it's the start of a new month, we know that the monthly candles retrace, right? Monthly candle retraces in the opposite direction before going off. Same thing in January, retrace in the opposite direction before pushing up. February, same thing as well, okay? Now we need to see, okay, maybe price will retrace back down before pushing up. If that's the case, then we can mark out our supports, okay? But now there's also a scenario that what if price, what if the market now starts printing bearish market structure? What are we going to do now? Okay, so let's visit both of these possibilities. So first, we'll finish drawing our levels. A lot of people tell me to post videos on how I draw my levels, and I'm just going to go through it right now because I don't think you need a video for that. I just showed you how to draw that level. Now let's go into the lower time frames. Okay, so we know that there's one at 147.4. As you can see, we had this rejection here and this rejection here. And as you can see, these are the candle bodies, right? When price closed above, it continued above. So it's a solid level. And same thing on Friday, right? Price came down, tapped it exactly to there. And if we look on the 15-minute, you can see it's exactly at that level. Okay. There are more levels over here. There's another one right here, 146.5. Okay. Last time monthly did something like this. It pushed down to 146.8 before pushing up, right? But that was when it closed above 145.5. Here we rejected this area, right? A clear rejection. So now you're thinking, okay, let's go back on here. Let's revisit this. We know we have this daily level right here, right? We know we have this daily level here. I'm actually gonna just hide this for now. So we have that level, this resistance here, and then we have this higher time frame level here too. So when we start going to the lower time frame, we can see, yes, price is kind of just in this area right now. Their structure hasn't shifted yet. Structure hasn't shifted yet, but In order for that to happen, let's say sell scenarios to play out, price would have to um, form some sort of bearish market structure for us for further continuation down, right? We also have this valid level here, 149.2. And as you can see on Friday, price pushed up all the way to 149.1, but it's at like 200, right? So this area before dropping a little. So this is still a valid intraday level, right? Like I said, so we got break of this structure. That doesn't really signify anything. We need break of higher time frame structures. Although that was higher time frame structure, we still need like a break of this and a shift into like bearish market structure. So if higher time frame started doing this, then we can possibly see swing opportunity for sells play out, right? And then you have a level here as well. 145. So then you can see opportunities for swing opportunities for sells play out. But until that happens, price is still in this bearish trend, right? And you're gonna have to actively watch higher time frame market structure. So it's also a possibility that price comes down here to this, let's say during pre-London, and then rejects it. So if it rejects it, it's likely going back up to this area or some area, right? Let's say price doesn't do that, price retraces and then breaks this level, right? Retest. Now we know that sells are possible to play out from here, right? Because what need to break for further downside and down to 146.5 if 147.5 breaks, right? Clean level to level play here as well. So you can expect that here as well if that scenario happens, okay? If that scenario happens, then likely we're going to come back to 145.5, 146.5. And this is a level you really have to watch out for, is because if let's say price starts forming a bullish market structure and it pushes up, if we break this, right? If we break this area back again, then price is likely to keep pushing up, right? And where could we go? Possibly back to this area again. And on the monthly candle, that would just look like a monthly wick coming down and continuing up and filling the buy range. So we do know we have a buy range here, right? But we are so high at 150.5 that we also need to retrace, right? And it makes sense, new monthly candle opening. So we could retrace nicely, and weekly has a large liquidation wick at the top. So you know that a lot of buy orders were profits were taken. So if see, same here. This was October 2017, November 2017. Price pushed up, pushed down, but in this case, we haven't really closed above 145.5, so it's not a valid break of that level. Right, daily still bullish. For us to shift into bearish market structure, like I said, higher time frames need to start like making bearish market structure. Otherwise, we're still in a bullish market. We're still creating higher lows, right? So I will be watching these levels that I have laid out: 145, 146.5, 147.5, and then you have 149.2. Also, you could watch 149.5 and 150.5 as well, right? So keep a watch out on these levels. We know that we got a 300 pip move, so that's a pretty solid retracement, right? That's bigger sell retracement than we have gotten over the past like couple months, right? Biggest one probably like December from 140 down to 137, and since then we haven't gotten a retracement that big. So now if you see market structure shifting, that's maybe your opportunity, and you find proper sell entries at valid supply areas, then that's high. Then you're increasing the probability of that trade, right? But if that fails to happen and higher time frame structure still is bullish, like rejecting this level, right, then you can expect, okay, possible continuations. Don't try to call out a change of higher time frame trend until market is fully ready and it shows you that yes, market structure is shifting. But for that to happen, you see we have like this area to get through, this area to get through. So this is also an order block area, right? This is the area of high liquidity, price pushed up, next daily candle pushed down, right? And then we push back up. So there's a lot of order and price activity going on here, like order activity. So we know this is also high demand area, and we did see that because we rejected it, right? So for like higher time frame sells, some shit like you'd have to see shift in structure, some shit like this, you know what I mean? But other than that, market structure is still holding bullish. We did go, we mapped out possible scenarios that could happen, right? Bullish and bearish. I'll just be watching these levels here respectively and see how price reacts to them, okay? And remember to trade what you see, not what you think. So let the market react to a level before you react to it, okay? Anyways, have a good day. Take care.